is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. Andrew, we're recording this. It is Tuesday, September 10th, start of the new school year. It is election season. Everyone's got big ambitions, big hopes for what this last quarter of the year is going to bring. But the market doesn't seem to be cooperating all that much. We've seen crypto basically trading range bound to down throughout the entire summer. Some of that, I guess, is related to the macro picture. Stocks have been trying to find their footing. There's been some concerns that maybe the Fed is behind the curve and that they've waited too long to cut rates. There's also some growing unease about AI and whether or not the big investments in GPUs is actually going to translate into productivity and economic gains in other companies. And I think everyone's kind of looking for some direction right here, and crypto is certainly no exception. What's your take on what's going on in the market?
Yeah, I think nothing I'm like overly worried about. Crypto, it never goes up in a straight line. So I think crypto market got like way ahead of itself in Q1, and it looked like we were headed towards the world's shortest bull market ever, just because we can't have, it's just not sustainable for it to go up 30% week on week for multiple weeks in a row. And so in a lot of ways, it was a bit worrying. Now this is starting, honestly, it's crazy. I mean, this is only my third crypto cycle, but this is really starting to play out like a traditional crypto cycle. I feel like we just always forget about it in the sense that pretty much everything is done relatively poorly, but Bitcoin has obviously, it's still very near all-time highs. It's only like 15% off. And over the last 12 months, it's still up, it's still up 120% year over year. So like in a lot of ways, it's pretty funny that everyone's like, we're in a bear market, even though we're up 120% year over year, and we're only, I guess we're 20% off highs. So yeah, I mean, I would say like in a lot of ways, it's pretty healthy, pretty normal. Overall macro picture looks pretty good for risk assets. I would say we're finally seeing a softening in the economy, which likely predicts we're not going to see a huge flare up in inflation. Fed is obviously getting more dovish. The fall is typically not a great time for risk assets, so maybe some of this is just being pulled forward a little bit. But just from like a purely seasonal perspective. But yeah, I mean, everything looks good for, I would say, Q1 of next year, maybe end of Q4. Sort of what I think things are going to start to heat up again. I don't know. What's your take on, I guess, crypto and just long tail crypto assets generally?
Well, I think that's the key question, right? You talked about Bitcoin, and it's true. Bitcoin it's down a little bit more than you said. I mean, it's down, almost 20% from its all-time high. But for a Bitcoin cycle, that's pretty small. Past cycles on their way to all-time highs, we've seen periods, I think, where it's between 3 and 5 different bull market corrections of at least 20% or more. So I think we've had one of those so far in this entire cycle on the way up. So this is certainly not anything out of the ordinary if you're using history as your guide. I think the much bigger question, to your point, though, is what about everything else? I think, if you look at previous cycles, there's always been growth in three things, right? There's been like growth in the total value of assets. There's been growth in the sort of number of new people in the market, and therefore sort of the speculative interest in the asset class. But there's also been real growth in the underlying utility of the technology, whether it was the first wave ICOs, which, people lamented and some have criticized, but the fact is, as a tool to raise capital for a new startup, really kind of proved that tokens could be like a really interesting instrument. You had DeFi summer and then the NFT wave. And then this time around, there's lots of really interesting stuff going on. I think the big themes this year have been how stablecoins continue to spread throughout the economy and have now hit almost an all-time high in terms of value. Prediction markets, which have actually become part of the election discussion, and some would say maybe are even influencing events as people pay more attention to them. They start to influence how people think about what's going on in the world, and then some other really interesting trends. But as a general rule, like I'm not totally sure that the growth in utility and narrative has necessarily aligned with the market, right? And I think that we've talked a little bit about some of the issues here. One is that Bitcoin is drawing a lot of capital away. We've seen how ETFs have gathered $18 billion of net new flows this year for the US listed funds led by BlackRock and Fidelity's and Bitwise and others. We had the CEO Hunter Horsley of Bitwise on recently. You should check that episode out, guests or listeners, if you're listening to this. But the other names have not done so great. Ethereum even seems to have run into this sort of like counter cyclical narrative of it being, I don't know what it is, but people seem pretty negative on it for some reason. I'd love to explore that a bit further. But then the final thing is this token diffusion problem, which is that, every incremental dollar that is interested in speculating in this asset class, investing in these platforms, being a participant in DeFi, there's just more and more names out there. And so it's harder for any single thing to capture the zeitgeist. That seems to be my feeling at the moment, right? There's the layer 2 explosion, there's the alt layer 1 thesis, applications, DeSci, all the rest. I don't know, it just feels like we haven't really figured out a proper set of themes. And again, like themes are important and narrative is important. Look at the AI trade in the stock market today. But ultimately there needs to be underlying usefulness, new user activity to help sort of underpin that. And I don't know, I'm not sure I'm convinced yet. What do you think?
Yeah, I think the crypto market is so bearish right now. It's kind of funny. I kind of forgot, I forgot that this is always the time that people get the most bearish, in the sense that like when everything is down in the dumps, it's like, and we're just coming off a bull market. There's still like a lot of like, I guess, residual optimism and sort of residual also capital. And yeah, residual excitement really from the previous bull market. So like fall of 2022, things were really bad. FTX had just blown up, but like companies still had a lot of cash for the most part. VCs were still investing, and people, they were like, it wasn't the hangover stage yet. It was more like the going home from the party. This part is kind of interesting because the party has begun to start a little bit with Bitcoin, but the vast majority of things haven't participated. And so in a lot of ways, this is almost more depressing because pretty much, there's a couple crypto assets that have done very well. Like you said, like Bitcoin has done quite well. Solana obviously done very well. Certain meme coins, and there's a couple sectors that have done incredibly well. Like you said, decentralized AI is one of them. But the vast majority of the rest of the asset class has done very poorly, like still 80% down plus from all-time highs.
Yeah, and even Solana. I mean, Solana's down, out of the dumps. Where we had an episode a year and a half ago. Is Solana going to die? Which was tongue in cheek because I don't think you and I either believe that. So it's up 15x from there, but it's still 50% below its all-time high as well.
Yeah, no, and that's the thing, right? So it's this interesting dynamic where, for me at least, I'm actually incredibly bullish. Like in a lot of ways, we pretty much have confirmation that we're in a crypto bull market. It's just, classic crypto cycle. It hasn't fed through to the rest of the asset class. It's just mostly in Bitcoin right now. So to me, I'm like, this is like the most, highest probability part of the cycle where I feel confident things are going to be moving up. But sentiment has never been worse. So it's kind of funny. And then, like you said, I totally agree. I mean, I would take the other side of that. I think we actually have a ton of narratives to draw from because we have a lot more usage across the board. So like when we first got into crypto, like I remember when we started SX, the biggest DApp in the world had 1,000 daily active users. Now there's like 100 dApps that have over 100,000 users. You know what I mean? And like you have billions of dollars of TVL. There's $80 billion in DeFi. Sure, that's down 50% from 150 billion, but that's up 8,000% from 100 million, which is how much there was when I got in the space, actually even less. So, we have so many different things. We got decentralized AIs is like obviously one of the more newer things, but like DeFi looks pretty good because the space has been beaten up, but most of the protocols have become profitable, and they have huge moats around them.
Yeah.
Both liquidity, brand, and security. So I think there's a lot of value there for like the crypto investor. There's a lot of things. There's some interesting things in gaming, DeFi, like you said, and yeah. So I don't know. I guess I'm curious what you think. Like, we only have a couple more minutes before our guest shows up, but I'm curious, like, what's your overall take on the crypto market? Are you bullish? Are you bearish over the next 3-6 months, or do you think it's a 12-month type thing?
Well, I think I kind of gave it away that I'm feeling not particularly good one way or the other, to be honest. I think probably, like, I look at the value of the market today and compare it to what I think the potential is for these underlying technology, like the underlying blockchains. It's like, if you believe, like I do, that eventually most, if not all, assets, and especially securities and financial assets, will be traded peer-to-peer, settling on chain, then some of these networks are going to see their volumes and their TVLs, if you want to call it that, increase by thousands of fold, right? And I do believe that's where we're headed. So, is it going to be one of these existing platforms like Ethereum or Solana? Is it going to be something new that doesn't exist yet? Is it going to happen on a layer 2? It's hard to say. I really don't know the answer to that. But owning a basket of these assets that are likely to support that kind of growth seems like, I don't know, kind of cheap, right? Given where everything is, if that's where you think we're headed. And in terms of, short-term sentiment, though, I don't know. I think you're right. I think a lot of people are really bearish. There's all these narratives and counter narratives around these different platforms. What's really remarkable about the state of the discourse, crypto Twitter, if you want to call it, is basically how everyone continues to exist in sort of a zero-sum mentality, which I find just so bizarre, right? It's like people from one clique dumping on another clique, one side saying theirs is better than the other side. It's like, I just don't see how that's, well, obviously it's not helpful, but so what? People can have whatever opinion they want, but it's more like, why do you think that? Like, why do you think that if you're a believer in the power of decentralization and tokenization and all of these other capabilities, can't you see a future where many of the leading platforms and applications are much bigger and more valuable than they are today? Just like, people in the 1990s, there was competition between different search engines and, different web browsers and so forth. And it's true that some groups lost market share at the expense of others, and, companies did go under. It's not like it doesn't happen. But in general, owning a basket of internet stocks in the 1990s, even with the crash, probably did pay out, quite well. And I think the same thing is true here, where it's like, rather than taking the zero-sum mentality, look at it as a positive sum exercise. Like, all of these things could be very valuable. Doesn't mean you shouldn't be critical when you see wrongdoing or fraud, or you shouldn't have a favorite, or you shouldn't be investing in building in one thing over another. Like, I'm not saying that. This isn't like kumbaya. It's just take a bigger picture view of what's going on. And I think that more than anything is what's lacking right now. Andrew, that was great. Quick sort of rundown. And we're very fortunate now to be joined by our guest for today's show, Andrei Poliakov. Andrei is the founder and CEO of APX Lending. Previous to that, he is a sort of a serial founder in the crypto space. He was named one of Canada's most influential crypto and blockchain leaders. Andrei's got a lot of views on a lot of things, and I actually, before we jump into APEX, love to just get your view, Andrei. First of all, welcome, but also get your view on what's going on in the market today. We were just having a little bit of a, discussion about that, which direction we're headed, sentiment, etc. I would love to just get your point of view.
Yeah, well, thanks first of all, hey guys, thanks for having me on the show. Yeah, I think the recent sort of the trend in the market is that things are reversing. I think ETFs are back in the green, which is really positive. I think there's some record volume traded. I think, if I'm not mistaken, over almost $3 trillion worth of volume traded between January and August for Bitcoin specifically. So there's a lot of there's definitely a lot of interest and a lot of momentum and a lot of positive direction. Notwithstanding the slight decrease or retraction in price that we've seen sort of recently.
Well, we're going to get into your business. Apex is a company a platform that's regulatory compliant, FINTRAC, FINRA regulated, that allows people to basically get loans against their Bitcoin, right? And other digital assets. But I think Bitcoin is really like the North Star for the business right now. Is that a fair assessment?
Yeah, so we offer both retail and institutional borrowers the opportunity to borrow both against Bitcoin and Ethereum. I can tell you that 90% of our loan applications are Bitcoin related. And so that's still sort of the go-to asset class for culturalization these days. And the business is good. There's a lot of demand. There's a lot of I think as a phenomenal use case for anybody who is who bought Bitcoin. And the question's always asked, what do I do with it after I buy it? Well, I think we're at the stage in the industry now where the industry's matured to a point in time where auxiliary services such as what APX Lending is offering are now available to both retail and institutional borrowers or investors, and so that question is now being answered. Well, you can borrow against your Bitcoin, you can use it as an asset class, as collateralized asset class, and actually acts as a liquidity. So not only do you get exposure to Bitcoin by buying it, but you don't even have to lock up all of your cash in it while doing that. You can actually borrow against it once you've bought it. So I think we've seen a lot of demand. We've traction's been really good, and not surprisingly so, because I think the industry is at a point of maturity where, like I mentioned, sort of these auxiliary services are in demand and are being used.
Yeah, I mean, Bitcoin is an asset. A lot of people own it as a long-term store of value. But like a portfolio of stocks, you're able to borrow against that to buy other stuff, to pay for your lifestyle, to meet your bills, to do whatever. And the same should be true for like other assets that people hold as long-term investments in their portfolio. So to me, it makes intuitive sense that a business like that would see tons of demand. I think also, interestingly, like before you hopped on, we were chatting about how it's a tale of two markets. Bitcoin is definitely, it's not at its all-time high, but to your point, we've seen tons of flows in ETFs. There's tons of Bitcoin in the discourse. Bitcoin continues to drive new investor interest, but the rest of the crypto asset complex is struggling a little bit. And even the mention of 90% Bitcoin, or I don't know if you said that, but majority Bitcoin and Ethereum being relatively small still is interesting, because it's not like Ethereum is 1/10 the market cap, right? Ethereum's with a quarter of the market cap. Or a third, and yet it only represents 10%. So to me, that speaks a lot to, I don't know, I'd love to get your point of view on that. Like, why do you think Bitcoin's so much more popular? But to me, part of it is maybe people think of Ethereum as a useful asset or a work asset, and then Bitcoin more as a long-term savings asset, because of the difference in the application ecosystems. But that's just me speculating. Do you have a point of view on that?
I think market cap is one way of looking at it. I think another sort of metric to look at is adoption, and I think Bitcoin has a vastly higher level of adoption than the other crypto assets, so especially within the retail sector, and so you have a lot more individuals that are sitting on Bitcoin specifically versus Ethereum. The other one is specifically because Bitcoin is less volatile. If you look at actual volatility analytics, and amongst all of the crypto assets that are available, Bitcoin is the volatility indexes are decreasing with time, and it's already the least volatile. So when you're borrowing against Bitcoin, the way the business works, maybe we should just take a step back and explain. We provide. So we have two verticals to the business. One is a direct-to-consumer lending platform available at apxlending.com, and there you can apply for a loan if you're in Canada or the US. We recently expanded into the US, so I'll talk a little bit about that as well. But you can apply for a loan, and this is a Bitcoin or Ethereum-backed loan, all the way up to 60% loan to value. So, if you have, for example, $10,000 worth of Bitcoin, you're able to get up to $6,000 worth of loan. And then and these loans can be anywhere from 3 months to 5 years in duration.
Just a quick question. Is the LTV different for Ethereum? Like, do you have a different ratio because of the volatility?
No, the LTV, the originating LTV is the same. The originating LTV is the same. It's up to 60%. Yeah. And so what we do then is we take that collateral, we park it with a qualified custodian. It's insured. It's in segregated custody. It's visible to the borrower for the duration of the loan, and we mark to market that collateral continuously, right? So we have our own algorithms and our own technology that we developed, and so we continuously mark to market that collateral. We evaluate the value of that collateral, right? If that value of that collateral drops, then at a certain point in time, because these are, the only security that these loans are, we have against these loans is the collateral. At a certain point in time, as the borrower, you have to either send more collateral or pay back some of your loan. So we don't let the value of the collateral fall lower than the value of the loan because there's no other security against the loan. And so watching, the volatility of that collateral, vis-a-vis the volatility of Bitcoin plays an important role in the whole sort of life cycle of the loan. And the fundamentally less volatile Bitcoin is, the better, the more peace of mind, I would say, a borrower would have, because they don't have to continuously sort of watch and monitor their loan. And that's one of the reasons why we give loans up to 60%, because there's basically a 40% buffer there. So in terms of pricing, so Bitcoin would have to fall by 40% before your loan is called and your collateral is liquidated, which is obviously a very large fall that I don't personally foresee would happen, in the future.
So and who's the classic sort of, I guess, counterparty to are you guys acting as the counterparty to these loans, or do you have sort of outside investors that are sort of taking the other side of the trade?
Yeah, we work with some of the largest loan providers in North America that provide the loan liquidity.
Nice. And because one thing I've noticed, because a lot of our podcast is sort of geared towards, we'll call them crypto curious TradFi investors.
Yeah.
And a lot of these TradFi investors I've talked to have actually have been getting into this trade as well. So providing liquidity. It's almost like a new type of trade for more enterprising, smaller TradFi hedge funds. I'm just kind of curious if that's something. Is that sort of something you foresee in the future, or is it just mostly working with big institutional lenders for now, or could this become its own almost form of shadow banking in a way, or almost a type of a new a hot new type of trade for investors that are looking for yield?
Yes, look, for anybody who understands sort of obviously the mechanics of crypto and the blockchain and Bitcoin specifically, and understands that with proper technology and mark to market algorithms, that having Bitcoin as a collateral is probably one of the best asset classes that you could possibly have as collateral for a loan. Unlike real estate or other physical property, Bitcoin is an extremely liquid collateral class. It's tradable 24/7 on global exchanges with extremely deep books, and so taking Bitcoin as a collateral class is a phenomenal sort of business model, and as an investor looking to generate yield on your deposit, it is one of the best asset classes, I would say. To answer your question specifically, we are currently going through. So APEX is registered with FinTrack in Canada. We're registered with FinCEN in the US, and we have an application in for registration with the Ontario Securities Commission in Canada as well. Our long-term vision could possibly, include going in the direction of accepting, client or investor deposits to be able to lend out. At this point in time, we work with institutional lenders that more than sort of suffice the demand that we have. But it's definitely something that we would like to open up, or at least explore opening up, in the future, as it does give a very interesting and high yield return for for deposits.
So basically, yeah. So right now you've got institutional and retail borrowers who are depositing Bitcoin with you in custodial wallets that you're putting in with a third-party custodian, right?
That's correct.
And then you've got liquidity providers who are lending cash against Bitcoin for some rate of return. What is the rate of return right now? Like, what are the lending rates for people who are getting these loans?
So we offer loans at 12.99% at this point in time.
Right. So if I'm a lender, I'm getting 12.9%. I'm holding, or at least the platform is custodying the collateral, right? It's not like someone pledges their assets, but then you've got to go after them, if something were to happen. Like, these are assets that you hold. And so that is very attractive at 12.9%. And I would expect that a lot of...
Just to clarify, the 12.99 is what we charge borrowers. What we pay out to lenders is between 8 and 10. I mean, it's still very, very healthy, but...
Pardon me. You're right, of course. Like, you guys have to make money, obviously somehow. Which, incidentally, that's really interesting for you guys, too. But for an individual user, that would be really attractive to be able to park cash, US dollars, I'm guessing Canadian dollars maybe, and earn 8 to 10%, even in this interest rate environment. Flip side is that we've seen this before. It's not like you've reinvented the wheel here. But we had some lend, and it's not a criticism, but we've seen how some lenders who've done similar businesses have made some bad decisions and going belly up. So how are you managing risk in the company to grow in a sustainable way?
So look, we are like you mentioned at the very beginning. My previous business was heavily regulated, and we were one of the first licensed crypto exchanges in Canada. With APX right now, like I mentioned, we're going through the regulatory process, and having regulatory oversight obviously is very important in our industry. I think, as you've rightfully said, there's been quite a bit of bad players both within lending and within crypto exchanges. And I think as the industry grows and matures, as regulations become clearer, as more companies are start operating within regulatory frameworks, we're going to see less and less of these sort of bad actors come into place. So our way of mitigating risk is multifold. The first one is that very, very heavy focus on regulation adhesion, applying for the proper licenses, applying for the proper registrations. And you have to keep in mind, for example, we have an application with Ontario Securities Commission, as I mentioned. Part of having that application required us to get what's known as institutional bond. An institutional bond is a form of insurance, and it's an insurance for our clients against any instances of fraud or theft by us, the company, right? So there's a benefit to going through these regulatory sort of hurdles, and most of those benefits are, obviously, all of those benefits are for the actual end client and borrower. So, having that insurance in place is very important. Again, what we do that is very, very unique, that wasn't done before, is when we take the collateral from our clients, it's deposited with a qualified custodian. That's an insured, licensed custodian, and it's deposited in segregated wallets. So as a borrower, you can see your collateral on the blockchain at any point in time. Like, you don't have to take my word for it that I'm not, doing something with it. I'm not, putting it elsewhere. You can literally see it, and you can see 24/7. You don't have to, you have to log. I mean, you can log into the dashboard, but you can also see it on the blockchain. So, I think, the reason that we had failures in the past in the lending space is fundamentally because companies would take clients' deposits, and they, instead of doing what they said they would do with them, they invested them in extremely risky ventures, and then those ventures flopped. With us, it's a little bit different. We're transparent by design. And so, like I mentioned, between the regulatory adhesion, between the insurance, the financial bond insurance that we have in place as a company, between the the qualified custodians that we work with, and the transparency that we offer on the wallets that collateral is held in and custodied in, that gives our borrowers the comfort and the visibility that they need. And all of those things were put in place because I, at one point in time, was using services like very similar to APX back in the day. And I'm trying to address all of the concerns that I personally had. Because when I was borrowing, using Bitcoin as collateral, and I was giving more Bitcoin than loan I was getting, I was always stressed Because at the end of the day, if the company, disappears the next day, I'm out, right? I'm out of my Bitcoin. So as I build out APX, I'm doing it in a way that addresses my own fears and concerns that having been in this industry for many years at this point in time, that I've had, and again, between the regulatory approach, working with regulators, being licensed, having the proper policies and procedures and insurances in place, and making sure we work with partners that are fully licensed as well. Another way that we address risk is we actually this is great news for you. So we recently passed our SOC 2 audit. So we are now SOC 2 compliant. That's right. So going on that route of so for your audience that's not aware, a SOC audit is a type of audit that looks at the operational how a company operates from a policies and procedures perspective, and it looks at the security aspect of a company. So how secure is the company's operational framework, and there's standards that it has to adhere to. But all to say, a SOC 2 audit should give comfort and confidence to both our borrowers and our partners about the level of the level of policies and procedures that we have in place to make sure that everything is secure, specifically at APX.
And do you think, one thing we've also talked a little bit about on this podcast is about how, leverage was a huge component of driving the bull market, last bull market, I should say. And a lot of people are kind of, where's that leverage going to come in this cycle? Because like you said, most of the sort of bad actors in the previous cycle, Celsius, FTX, all these different things, blew up. And so some people have looked to things like restaking, at least in the Ethereum community. DeFi is still around, but it's definitely obviously a lot less excitement this time around. Do you think, I guess, leverage is a key sort of driver of this next bull market? And in which case, where do you think that's going to, where do you think the main sort of source of leverage is going to come from? Is it just going to be perps? Is it, things that already exist, or is it going to be something new? Or is leverage just kind of like a byproduct of the bull market itself and not necessarily one of the big drivers?
Well, I mean, I think a lot of what's driving interest right now is the ETFs obviously brought a lot of capital in. I think we have a lot of institutional interest as well. So I don't know if leverage is playing as much of a role this time around. Leverage also brings around volatility to a certain extent as well. And so you have this sort of feedback loop that happens, and that doesn't really help anybody. I personally, I am liking. Again, being in this industry since 2016, I've lived through a number of crypto winters and bull cycles, and I like how things are starting to calm down. I think we're getting to a more healthy, long-term sort of sustainable way of like cycle pattern, and so I think I look at it from the perspective of how do we get to everybody talks about the next billion users, but how do we truly create technology and services that allow that next billion users to actually onboard in crypto? And I think that's going to drive much more growth than any leverage that a short term would. And so that's why when you look at sort of our business and other businesses that are growing, that are providing these auxiliary services, I think that's key really, because when you look at the there's a graph that talks about the evolution of new technology, right? You have the early adopters, you have the majority, you have the laggers, and I forget the name of the book now, but there's a book that talks about it. And for technology to get into the part of its life cycle that where the majority of users start using it, you need it to be at a level where it's not just addressing one single pain point. There has to be a group, a cohort of services that address a number of pain points for users of any technology. In this case, we're talking about crypto. But for users to actually on board onto that technology and use it en masse. So you can't just have like a crypto exchange or just a way for people to just buy and sell Bitcoin. As an example, I'm just trying to draw a parallel. You need a whole basket of services, whether those are ETFs, whether those are crypto exchanges, whether those are lending services, to work together and provide a range of utility. And then that technology takes off, and then there's mass adoption. Because again, users that are not, like crypto heads that are not deep down in this industry, they need to have access to the technology that is well developed, is well integrated between the different service providers that they have, and requires the least amount of brain power to use. And so I think as we talk about sort of, again, like what's going to be driving the next bull cycles and what's going to be driving the industry forward, I think it's sort of that correlation between the growth of services and the utility and being able to use Bitcoin for different things, specifically Bitcoin related, together with actual mass adoption and people onboarding and buying. Like as an example, if somebody says now, like, you often talk to people and then they say, oh, what can you do with Bitcoin? What can I do with crypto? I can only buy and sell it now. Well, it's like, okay, sure, maybe that was in the past, but what you can do now is you can borrow against it, and maybe what you can do in the future, or you can invest this in an ETF, invest in it through an ETF, and so now we're bringing utility to people, right? And so now people are able to actually utilize their investments in different ways, and I mean, lending is just one, or borrowing is just one. But I think that is going to drive a lot more mass adoption, which then in turn is going to drive a lot more growth in, if we're talking about market prices, than short-term leverage would. Sorry, I went about it.
So on the topic,
on my way back home afterwards. Sorry, say that again.
Well, I want to drill down on that a little bit. So on the topic of utility, there's been a lot of excitement in the last couple of years around the Bitcoin network about how this is an asset class an asset that has reached almost $1 trillion in value as store value, as a payment, tool for certain use cases, as an asset to build financial services like lending on top of, and the rest of it. But now people are are thinking that we can reimagine it as something different, right? Sort of season 2 of Bitcoin. That here is a platform that can be used to secure value in other assets, that can be used to sign contracts, that can be used to build decentralized applications. And it's an interesting theory because, new direction for Bitcoin, because actually it's not a new direction, it's an old direction. 10 years ago, a lot of early backers and people who were really interested in this space thought that the blockchain revolution was going to happen on Bitcoin. That, you had this network, it had already been battle tested, it was large and fairly resilient. And so smart contracts and other assets and so forth was all going to happen on this network. And that didn't happen. But now it seems like we've seen a bit of a turnaround. So what does that have to do with your business? Well, the reason I'm asking is that, this question around trust of, where's my collateral? Where is it being held? What happens if the company goes bankrupt? The traditional world has a whole bunch of safeguards in place for that, right? You've got financial regulators. You've got SOC 1 and SOC 2 auditors. You've got segregated custody with third-party companies, right? So if you go bankrupt as a firm, those assets are held in trust for the client somewhere else. Those are all the old world ways of doing things. The new world way of doing things, or whatever, is you've got lending pool on chain where people post collateral in crypto assets, stable coins, Bitcoin, whatever, and get loans, with LTVs of 50% or 60% against that. And in the event that that collateral dips below a certain level, they don't get a margin call from Apex saying top it up or FYI. They get automatically liquidated. So there are lots of disadvantages to the on-chain version of this. Obviously, you're trading counterparty risk for smart contract risk, and there can be risks there. Being automatically liquidated is not always a fun experience. Maybe you'd like some heads up first. And ultimately, the bigger the pool of capital gets, the more risky it becomes in a way, because it becomes a bigger target for people who want to exploit it. So anyway, I'm just thinking, like, you've chosen to go about this by building a company that brings this functionality, as you've described it, to the financial market using a conventional toolkit, right? Like, I think that's fair to say.
Yep.
And I'd just like to sort of hear your opinion on why you chose that route. Obviously, if you were going to go the traditional route, you want to be regulated and you want to have all the best practices. But even before that, there was a decision of, if I'm going to build a lending platform, I can build it on chain or I can do it in a more traditional way. So you did it the traditional way, and I'm curious what your thought process was in making that.
Yeah, that's a great question, Alex. And there was definitely a thought process behind that. I'll tell you exactly what it is or what it was. My belief is that the industry is trending towards a direction where banks and credit unions and other financial institutions are going to start offering more and more retail products to their clients, crypto related retail products. And obviously the ETFs are like a prime example of that happening. But I think in the not so distant future, we're going to start seeing Bitcoin directly being traded on exchanges, and so that trading business is going to move over to the old school, as you put it, financial institutions. And so what we build with Apex, and so I mentioned in the beginning, so we had two verticals to the business. One was the direct to consumer lending platform, and then the second vertical is actually a white label solution. And so that white label solution is our technology, and it's our proprietary technology that we offer to other lenders, to banks, to credit unions, to financial institutions globally that are looking to offer crypto-backed lending services to their end clients. And I can tell you we're seeing a lot of demand for that. There's a lot of interest, and that was, I was expecting that. And the reason that we build that technology using, and our business using that sort of old school framework is because I was anticipating the banks entering this space, and I was anticipating them looking for technology that they could integrate. And I was definitely also anticipating that DeFi was not going to be that technology just yet. And so putting all those things together, when we were starting out, I made the conscientious decision to build out our tech in a way that we could future-proof it with or against sort of banks entering this space. And banks lend, that's their bread and butter. So to expect them not to enter the space would have been silly, right? They are going to enter the space. And we want to be that technology solutions provider for the financial institutions that are looking to offer lending services. And again, they're not going to go for DeFi right now. They need to have regulated, they need to have SOC 2 compliant technology that they can offer, that they can integrate. And so that's why we did what we did. That's how we are future-proofing our business by having that white label solution. And again, it being having built it in a way that it can be and is currently, hopefully, in the near future, going to be rolled out with a number of financial institutions.
That's pretty cool. Very interesting. Well, Andrei, listen, this has been great to get caught up. We actually had you on about a year ago, I think. Would love to have you on again to see what's new with the business. But wish you the best of luck. Tell us what's next for Apex in the next little while here.
Yeah. Well, first of all, thanks for having me, guys. Really enjoyed the chat. So we are quite aggressively expanding into the US at the moment. We announced our US expansion at the Blockchain Futures Conference in Toronto last month, and we've had a ton of demand coming through in the US. So we are looking to really expand our business both in the US and then abroad as well. The vision for Apex is to build really a global compliant crypto-backed lending business, and we're having a lot of very, very interesting discussions with potential partners in Asia Pacific, in the US, and in Latin America. So we're looking to grow this business internationally very, very aggressively.
Awesome. Well, we wish you the best of luck. Where can people learn more about Apex? Just about the business, sign up, whatever.
Yeah, absolutely. So you can go to our website. That's at www.apxlending.com. You have all our links to there, to our blog, our social media, everything that you want to check out. Again, it's www.apxlending.com. And my name's Andrei Poliakov.
Thanks, Andrei. We appreciate it. And great to see you recently at that event.
Likewise. Thanks, Alex. Thanks, Andrew. And thanks, Jake. Really appreciate it.
Yeah, for sure.
Thanks,
All right,
guys.
take care.
Cheers.
Well, that's it for this week's episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. We'll be back next week with another episode. Till then, take care. Oh, and don't forget, rate the podcast, like the podcast, share the podcast. Helps other people find it. See you next time.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.